Welcome back. You're still tuned into Trading Hour. Rossari Biotech, that is the management on our radar. The company posted a slightly muted set of EBITDA growth this time. Their institutional and B2C businesses remain soft. To discuss this quarter gone by and way forward, we are joined by Sunil, Chari, the co-founder and managing director of Rossari with us. Mr. Chari, good morning. Thank you so much for joining in. I wanted to understand, it's a 5% growth on the EBITDA. You've seen better growth on EBITDA in the previous quarters. So what was the volume growth this time around? Which segment was this led by? And if you can also give us the export and domestic breakup, because exports did do very well in the last year.
So normally our first quarter is always muted. And if you compare first quarter of last year to the first quarter of this year, we are 11% up on volumes, 11% up on sales. This quarter we had some project delays because we had to stop manufacturing for a few days because of the expansion which will come up in stream in this quarter, and we expect better numbers for the next 3 quarters. We should look at the yearly figures rather than quarter to quarter only.
No, I do get that. You said the volumes were up 11% this time?
Yeah, compared to the first quarter of last financial year.
Okay, and what was the export growth this time?
Export growth is 6% compared to the first quarter of the last financial year. So quarter on quarter, we have done much better than before. And I think we lost some days because of expansion work when we could not do any production because ethylene oxide is a hazardous raw material. And I think we should do better this quarter.
Mr. Chari, good morning. Thank you for joining in. You've mentioned exports have done better, but what is the export to domestic mix currently? And last year, if you mentioned that it was at 50%, right? It was 50%. What is the kind of growth that you are envisaging this time around for your exports?
So we are in the first quarter of this financial year, we are at about 26% as exports. We had 27% in the last quarter. So I think we should maintain this or grow better than this in exports. The home personal and performance chemical segment, the HPPC segment, is something which is the growth driver for us. Textile was little muted, animal health and nutrition was little muted, but I think we should pick up in the remaining quarters.
Okay, so this 11% volume growth is ex the institutional business, or is it with the institutional business?
The institutional business, but the institutional business also this first quarter was little slower than compared to the last quarter.
Okay, so ex of institutional business, it should be high single digits.
Yes.
Okay. What about ethylene oxide? That's a major raw material. What's the availability looking like from Reliance Industries? What is the split currently when it comes to raw materials for you?
So the ethylene oxide from Reliance, we are expecting the new material to come in next 12 months. That is what is the indication from Reliance. And then I think we should have surplus ethylene oxide availability. We have ramped up the capacity already. So by the time this new ethylene oxide comes, in the next financial year, we have the capex already done for it.
Oh, Mr. Chari, your first half is generally agro heavy, right? And it is the period where the contribution of Unitop is the highest. Now, the first quarter is suggesting some weakness in that portfolio as well. So, have you any comments here on this generic agrochem demand and on the product mix in this space?
No, if you compare the first quarter of the last financial year and this financial year, we are up by 11% even in agro. This second quarter is the highest agro sales, and I think our demand position and order position looks better compared to last year also. So we don't see any slowdown in agro for us. The monsoons have been good in all the regions where we sell.
Okay. What kind of growth are you looking at in FY26 itself when it comes to the top line, the bottom line, the margins as well? FY25 saw a revenue growth of around 14%. The profits were up 4.5%. Will you be doing better than that?
So when we did our IPO, I always say this, we were at 600-700 crores. Last year we did 2,080 crores. And I want to be conservative now and say maybe, high double-digit figures, 10% plus, and let the figures speak by itself at the end of the year.
Do you have any targets? You're saying 10% is what you're looking at. What about the margin number? Considering that raw material situation would improve, you'll get the ethylene oxide supplies as well coming by?
The ethyl oxide supplies will come in the next financial year, the additional ones. So I would hold the similar margins as last year.
What about pricing, Mr. Chari? Crude prices have been trending lower, acrylic acid prices and other raw material prices have also remained soft. Have you taken any price cuts this time around? What is the kind of trends that you are envisaging for the rest of the year when it comes to pricing?
So pricing is passed through, as we said in all the calls. So as the raw material prices fall, our FG prices fall automatically. And that is why also, if you see 3 years from now, volumes are nearly 60-70% up. But you don't see the turnover going so up because per kilo realization in finished goods is less. So I think we are good, and I think this is the bottom I have seen in the raw material pricing in the last 10-15 years. It should become better. I think the per kilo realization should increase for all of us.
Okay, so realizations should increase from here on for raw material prices. I wanted to understand what the freight situation is currently, Mr. Chari. The other expenses hike that we've seen in the PNL, is it because of higher freight? What's the export or import situation looking like when it comes to transportation?
The freight has increased substantially, but still it's not like the 2021-22 types. It is still manageable. Freight from China to India has increased substantially, but from here to the US, to Mexico, to Europe, to Turkey, has seen some increase, but I think it is stable now. We have increased manpower. So if you see, our manpower costs have gone up, and we are adding more people in R&D, we are adding more people in sales, and because the capacity is coming up and we need to have people to service those capacities.
All right, Mr. Chari, thank you so much for sparing time and joining us today. Wish you good luck for the rest of the year as well. The management there of Rossari Biotech on the road ahead for the company. A slight recovery from the lows of the day. The stock still 4% lower, currently at 713. Take a short break, continue our conversation on the markets and the recovery that we have seen from the lows of the day. Parag Thakkar of Fort Capital joins us on the other side. Stay tuned.